Do the words stock market just make your head spin? Hey, you're not alone. It can feel like this whole other world with its own language and, a ton of complexity. But what if I told you that getting started is actually way simpler than you think? Today, we're going to build a really clear roadmap to help you start your journey into understanding the US stock market. Let's dive in. And look, it is completely normal to feel that way. I mean, you hear all these terms thrown around on the news. You see charts that look like a foreign language. It's so easy to feel like you're on the outside looking in. But here's the secret. You do not need to be some Wall Street genius to get the basics. It's way more achievable than you probably think. So let's treat this explainer like your personal map. We've looked at the best advice from tons of beginner guides and basically boiled it all down into a simple step-by-step path. Now, one really important note here. This is not about giving you hot stock tips or telling you what to buy. It's about empowering you with the knowledge of how to begin your learning journey, one simple concept at a time.
So where do we start? Well, before we even get into strategies or what the market is doing, we have to answer the most basic question of all. What are we actually buying when we buy a stock? This right here is the bedrock. You get this, and I promise everything else starts to click into place.
It really is that simple. When you buy a stock, or a share, you'll hear both terms, you are literally buying a tiny, tiny piece of ownership in a public company. So if you own a share of, say, Apple, you're not just a customer, you are technically a part owner. That means you have a claim on the company's assets and a little slice of its potential profits.
And where does all this buying and selling happen? In the stock market. Just think of it like a massive, super organized marketplace, like the New York Stock Exchange or the NASDAQ. Its whole job is to bring millions of buyers and sellers together every single day to trade these tiny pieces of companies in a fair and orderly way. Okay, so you know what a stock is. Great. The next step is understanding the language that people use to talk about stocks. The market has its own jargon, and as pretty much every financial guide will tell you, learning just a few key terms can unlock a whole new level of understanding.
You're going to hear these two terms all the time. The analogy is simple, but it's super powerful. A bull market is when the market is charging forward and prices are generally going up, kind of like a bull thrusting its horns up. A bear market is the exact opposite. Investors are feeling pessimistic and prices are falling, like a bear swiping its paws down.
Besides the stock price going up, there's another way to make money. Some companies, usually older, more stable ones, decide to share a portion of their profits directly with their shareholders. That payment is called a dividend. You can think of it as a reward for being an owner, a direct cash thank you for your investment.
You've definitely heard this acronym in the news. An IPO, or initial public offering, is a huge deal for a company. It is the very first time a private company sells its stock to the public, which is how it becomes a publicly traded company. This is the big moment when everyday investors finally get a shot at buying a piece of the action.
All right, now before we even think about opening an account, there is a super crucial step that many financial experts like Miki Rai always stress. It's about looking inward. Before you put a single dollar into the market, you've got to make sure your own financial house is in order.
And this is a question you have to ask yourself, honestly. Investing always involves risk. The value of your stocks can go down just as easily as they can go up. That's why you should never, ever invest money that you might need for rent next month or to fix your car. So what does being financially ready actually mean?
Well, it pretty much boils down to these two pillars. First, build yourself an emergency fund. We're talking 3 to 6 months of living expenses tucked away in a safe savings account you can get to easily. It's your buffer for when life happens. Second, you want to aggressively pay down high-interest debt, especially credit cards. I mean, the guaranteed return you get from paying off a credit card with 20% interest is almost impossible to beat in the stock market.
So once that foundation is built, you understand the language, and your personal finances are in order. Now it's time. It's time to go from theory to practice. This is how you actually go from being a student of the market to an investor.
So here's the practical process, broken down into 3 simple steps. First, you'll open a brokerage account. Just think of this as the special kind of account that lets you buy and sell stocks. There are tons of well-known companies that offer them online. Second, you'll connect your bank account and transfer the money you've set aside for investing. And third, after you do your research, you'll place your first trade. It really is a clear, manageable process.
I want you to remember this. So many people think you need a ton of money to start investing. But that's just a myth. As a lot of creators like Wall Street Trapper often point out, what's way more important is starting with knowledge and a clear plan, even if you're just starting with a small amount.
So let's just quickly trace our path one more time. We started with the absolute building blocks, what a stock actually is. Then we learned to speak the language of the market. We took a really important pause for that financial checkup. And finally, we laid out the steps to take action. Foundation, language, readiness, and action. That's the roadmap.
You now have the map. You know the steps. The journey from just being curious about the stock market to becoming a confident learner is laid out right in front of you. So the only question left is, which of these steps will you take first?